Hey, this is Danielle. Welcome to today's episode of Your Daily Five. Today, I'm going to be talking about the top 5 stocks that I think are getting ready to make big moves. Now, why do I think that? Well, there's a couple of reasons. Number one, most of these tickers have a squeeze on at least one or more time frames. Additionally, they have relative strength in the space that they're in. And they also have had positive earnings moves recently, most recently being the last quarter, with many of these having breakaway gaps. Now, with earnings season coming up again here soon, generally around the end of March, beginning of April, is when I look for stocks to make moves going into earnings. That's why I'm looking for some of these relative strength tickers to trade up into my key target zones, making some momentum moves to the upside. So let's go ahead and start off. And I'm going to talk about Netflix first. So looking at Netflix, I like this one for a variety of different reasons. Number one, if you go back and if you see what occurred last quarter when it reported earnings, you can see this huge breakaway gap. Anytime a stock has a breakaway gap the previous quarter, typically what you will see is a move higher going into earnings the next quarter. Now, we don't have all the data just yet because we don't have a confirmed earnings report, but this is probably going to be around the second week in April. So, generally I like to start about 21 days before that earnings report, which would put us at right about now for a move higher going into earnings. So looking at Netflix, I like it for those reasons. Additionally, you can see that there's a squeeze here. So the 195-minute time frame is demonstrating this consolidation. Generally, that consolidation is going to break out in the direction of the trend, which is up. Now, if we look at where that could be, the easiest target is always going to be the previous high. So you just want to look at where this stock had traded to in the past. It's going to be right about 625. So that's what I would use as the quote unquote easy short-term target. If I go to the daily chart, that's where you can get a little bit more information. And you can see that the stock has been having a pretty nice run ever since these lows all the way down here. And if you look back and you see where it has been, or at least where that previous high was, that previous high was at $700 a share. Now, with it trading right about $615, it does have about a $70 expected move going into earnings, which means that it's absolutely possible it trades up into $700 either before or after that earnings report, but within the time frame of about a month. So I think with Netflix, for me, the short-term target's definitely going to be 625. That's going to be the easier target. After that, I would be looking for a return up into 650. And then in the instance that we hit 650 and we keep going, that next target is going to be 700, which is that previous all-time high. But ultimately, I think it looks great right here now. The next one I would like to discuss is going to be Meta. So the reason why I like Meta is very similar to the reason why I like Netflix. I mean, obviously it's had a phenomenal recovery off of the lows. You can also see that after earnings last quarter, it just had this huge breakaway gap and it's continued to go. So when you're looking at this, you're saying, okay, well, what does that mean for earnings this quarter and what could I do with it here? Now, inevitably, I always have people that say, well, you're crazy. You want to buy this after it's been up and up and up. And it just, why would you buy this here? Well, I would buy it here because I'm a trader and because I focus on relative strength and because I focus on tickers that are, more likely to continue to go because they have bullish trading setups. I'm definitely not suggesting to come in and buy shares of stock at all-time highs. It's definitely not something that I usually do. Obviously I like to buy stocks on pullbacks, but when you're trading, especially when you're looking at an upcoming earnings report and you have a stock that recently had a breakaway gap that never even came close to coming back to fill, that's something that will likely keep going into that earnings report. So as far as price targets are concerned, this one has 195-minute squeeze as well. Again, I would look for a return up to this previous high. So if you look at what level that would be, that previous high is going to come in right around 525. So trading right now at 500, I mean, that's some pretty decent upside up into that 525 price point. And then after that, I have extensions up at 550 and then up at 600. So I think that this one, continues to look good to the upside for all the reasons that I stated. Now, looking at Amazon, this is another one that I like right here. I will say that for this one, I have still been dollar cost averaging into the shares. Obviously, better to buy it down here at 120, right? But I do think that there's still some pretty good upside in Amazon. And one of the reasons why I have been averaging into shares in this one is because it is a lower price Magnificent Seven name. And my idea with this is just to continue growing a share position so that when you have, 100 lot or 200 lot, then you can sell covered calls against the shares. So with this stock, that is one plan that I have here. This one doesn't have a 195-minute squeeze on it, but if you look at the daily chart, what you're going to see is number one, we're very, very close to the previous all-time high in Amazon. You're currently trading at 177 and your previous high was up here at about 188. So anytime you have a stock that's just so close to that previous high, it's going to just provide a situation where you can generally get in and trade that stock right up to that previous high because it acts like a magnet. So I do think it's good for a short-term trade. You have, again, that breakaway gap after earnings last quarter. We have earnings coming up at the end of April. So again, that's another catalyst. Anytime you see a stock that is gapping up, and just continuing to run away, especially multiple quarters in a row, generally investors are going to get excited about that and they're going to buy it before the earnings report. Now, when you look at the weekly chart, another reason that I'm going to show you here why I still like this name is because I think that after we break out up above this 188 price point, I think we still have, some pretty significant room. Definitely, looking for it to trade up into 200, but I think ultimately it can make it up into 250. So still at a 175 basically price point, I still think we have some pretty decent upside. So the next one that I wanted to look at is going to be just a little bit different, but it still looks great, I think. So let's talk about Google. When I'm looking at Google, this one has had a weekly squeeze that fired to the upside. So we had a bunch of consolidation right here. And then we ended up seeing a breakout. And after that, it made targets, broke up above this previous high. It's pulled back. But guess what? Buyers are coming in. And you guessed it, we have earnings coming up. So that's always really exciting for me. When we look at a daily chart on this ticker, what I will point out to you is that it had a bit of a downdraft, but it hit that 200 simple and it bounced really well. And not only did it bounce, but it bounced and it broke up through these areas of resistance. And today it broke up through the 50 simple. So anytime we have a breakup through the 50 simple, you can tell that this is a pretty strong buy going on. And so I think that this one can be traded back up into 150 and ultimately, back up into 160. Let me look at my weekly chart again, because this is another one, Amazon and Google have been kind of averaging in on this, but you can see that if you look at kind of like a full extension target, that's going to bring you up into 175. So I still think that there's decent upside with this. It's trading 143. So I still think there's decent upside in this name, even though it's kind of already had a big move. Next, last but not least, I would like to discuss Crowdstrike. So this is in a key space, cybersecurity. Obviously, it had a pretty big downdraft during the bear market, but it's also had a phenomenal recovery. If you look at the daily chart, What I'm going to point out to you is that you have a daily squeeze. So not only do you have a daily squeeze, but you have a very positive trend here. Nice trend. You have nice pullbacks. And this move after earnings was explosive. It gapped up. It was up about 20% or so. Yes, it did pull back after that earnings gap, pulled back. It hit this area of support and it's holding. But you know what's great is when you have a stock that's in a nice bullish trend and it has a positive earnings move and then that momentum kind of dies. Not really, I shouldn't say dies, but it kind of just rolls away and then it comes back and it consolidates again. It's just basically getting ready for another move to the upside. So with this one, you're actually through the earnings risk, which can be good. And I think that after this point, you're going to be able to get in and trade it back up to the upside. So, your first target is always going to be that return to the previous high. So that level is going to be based off of the gap that it had after earnings. So it's going to be about 360. But after that, if it can actually break through 360, then I think you'll be onwards and upwards into 375. And then into 400. So these are the stocks that I like here today. If you want to learn more about these stocks, make sure you get a Stockcharts account because it's absolutely amazing. And this is how you can do your technical analysis. You can look at earnings reports, identify when the earnings reports are. You can use technical analysis to determine if you want to get in, if you want to get out, which kind of tickers are trending in a positive manner. Or perhaps if you like the downside, you can find those too. But definitely recommend it. If you want to learn more from me, you can follow me on YouTube. This is going to be my YouTube account. It is Trader Danielle. Be careful because there's a lot of scammers out there. If anybody asks you to give you money, that's not me. But it's TraderDanielle. Other than that, I hope you have a great rest of your day, great rest of your weekend, and I hope you can go out there and make some great trades. Thank you.